Hello and welcome back to another Rolling Trades podcast. I'm market strategist Lane Dungan, covering grain market commentary. We're going to look at weekly outlook today and really what's to come. So let's first start what we're seeing so far this week. Corn's down on the week 4.5 cents. Soybeans up on the week 9 cents, and wheat is up on the week 9.25 cents. Now let's kind of move into the fundamental action that we've received and are going to receive this week. So Monday was President's Day, so we had a short week this week, kind of pushing everything back. Tuesday, we received weekly inspection and NOPA crush. Wednesday, nothing. Thursday, EIA Energy and USDA Ag Outlook Forum is occurring kind of this week, and we got some numbers out on it today. And then Friday, we'll receive our commitment of traders report per usual and our export sales report that is usually happening Thursday, but it's coming out Friday this week. Now let's go into the weekly inspection numbers we received Tuesday. Good numbers to see out of inspections. Corn is increasing from last week, 14%, and we had a 4-week percentage change of an increase of 10-week over the 4-week average. Soybean, we saw a 6% increase from last week, which is good because we saw down numbers last week, but we're still down 6% over the 4-week average. Wheat, we were down 35% since last week and 9-cent change to the 4-week average. And we did see a lot of that in the trade when we'll look at that more with the chart and some technical analysis later on. But wheat has really had a mixed week this week, from shooting down lows to screaming highs and a 9-cent positive where we're at today at the end of the day, Thursday. But a lot of this news is based around the export idea and what's happening in Russia, Ukraine, as well as Middle East conflict. Now for EIA Energy, current came in higher for production than last week, which is a great number. 2 weeks ago now, we had that low production number, and we saw a rebound last week and then a fall through this week on production numbers. Great number to see as the continuous production of ethanol continues to stay high. And now we can look at the stocks. We're at 25.6, just a small increase from last week. Nothing too crazy out of the stocks level here, but great to see that production is still going higher. Now for the USDA Ag Forum here. And I just want to preface before we get into this that these are not statistical numbers by any means. They're not survey-based, just kind of more of a pool. So the trade doesn't, in my opinion, really use all this information that much into the traded action. We saw that today where we didn't see that much movement. We saw a little bit in soybean pricing today go higher, and we see why due to a couple numbers here on our USDA Outlook report, the one on the right. And now let's kind of look into that more. So what they're saying is, which is kind of assumed, planted acres are going to be a small decrease since last year and an increase in planted acres in soybeans. It's been talked about the last couple of weeks now due to the price of soybeans rocketing high right before we're getting into this predictive planting season where a lot of farmers are picking their acreage amount for each commodity as well as their seed production and what they're going to be putting in the ground. So not too out of the ordinary here. Yield is still set at 53, which is what it was set at last year. Not too much of a change. Like I said, it's not statistical reports. And yield production for corn is an increase by 3.5. 183 would be still extremely high. We really didn't believe for the longest time that this 186.5 was going to come to fruition, but here we are where this is the reality we're living in, where crop prices, crop yield keeps getting higher and higher, the quality of the seeds getting better, and the conditions we experienced this year were good. A lot of different bias from area to area, but overall it does seem like it was a good crop year. Those are really the main for corn. Ethanol is going to stay the same. We're going to see a slight dip in exports. But for the exports on soybeans, we're going to see a slight increase from 1.575 to 1.700. So roughly 125 increase. Roughly, I mean, it could be higher than that if China continues to beef up production or buying of soybeans, but we'll have to see when it comes to not when we get there. But for now, that's really all that came out of this USDA Ag Forum, but not too much effect on price today, a little bit for soybeans though. Now let's look into more technical movers. So we really had a large week of open interest in all grain commodities last week, with corn, soybeans, and wheat really rocketing off with volume and open interest, as well as soy oil and soy meal. Soybean oil has been shooting up in price the last really 3 weeks now, with the 45Z tax credit continuously getting mentioned, and the production of we had a good NOPA crush number come out earlier this week also, which also leads to that higher price. But really interesting to see how soybean oil continues to go along. Wheat and Kansas City wheat a little down this since last week, around 63% down for Chicago wheat. But I believe the open interest might shift around as these tension rises and we see more short selling or short covering, when we're looking at the chart. Now let's get into the technicals. So corn chart today, just looking on the daily chart here, is a lot of indecision in my opinion, with the large wicks and the small open to close range. And this really shows, like I said, indecision on where we're going to go next after this. I feel like there's usually some price suppression during February already due to crop insurance pricing occurring, as well as we have this USDA Ag Forum. So most of the trade is just kind of waiting to see what they say, and if it's a shocking number, to be a quick reaction, similar to a WASDE or an acres report, where we just get a shock report. Now looking at soybean technicals, we can see that we're still shooting up higher and higher. I mentioned today how we saw a green candle due to USDA factors kind of changing. We're seeing a higher export and higher amount of acres planted in soybeans. Both of these were expected in the trade. Not really firm numbers because these USDA numbers aren't firm themselves, but it is more of a stable backing that they are saying something about it. Now for the real large movers here, and we can just see how volatile this market is. I put a few notes on the board just to kind of go over what's going on here, and the main, views that traders in this market are looking at is cold risk in Ukraine, high wind damage in the plain states. This continues to get talked about more and more this week, and I think that's really what sparked an interest in the 2-day buying really shooting up, and just increased tension in the Middle East. There's a lot of talks about wheat import-export heading in that area from Black Sea region, which is also with Ukraine cold. So I think there's a lot of the mix just domino affecting into the price shoot up. Yesterday we had that large green candle, and then even larger one today because of this. We're at really highest price in 3 months with this candle today. Last time we saw prices around this was in the middle of November. But that's really it for the technical analysis. One more thing I want to mention here is daily commentary. I post daily. I cover really what more day-to-day ideas of the corn, soybean, and wheat markets, really where they're at, what the main factors are of that day. And it's not a super long report, but really just gives you the information you need to go about your day that day, where these podcasts I post in here are more longer, in-depth ones. Also on there, I have my spread recap, which covers historical trends for all spreads. This is a great tool for hedgers to use if they're looking for a carry in this market, or a potential price arbitrage is a great key finder in that detailed list there. And I cover corn, soybean, wheat, Kansas City wheat, soybean oil, and soybean meal. Email is to talk more about these or receive these is ldungan@rjobrien.com, or you can call me and say you'd like to get on this list at 312-373-5366. And I'm also on Twitter at Lane Dungan. I'm going to post some articles on there also for your information to get a quick snapshot and to see what's happening. That's really it for this week's report. Most of the trade is looking at what's going to be happening next week and where this volatility is going to end at, or if it's going to follow through in the next week. I will be in Commodity Classic in San Antonio, Texas next week. So if you're in the area or going to the event, it would be a great way to, we could talk about these markets more in depth and talk about a specific strategy to you. Or if you're not at the event and you want to talk strategy or hedging ideas, feel free to email me at ldungan@rjobrien.com or reach me by phone at 312-373-5366. And we can discuss specific strategies to you and really how you can get the best out of your current situation. Look forward to talking to you soon, and we'll talk later. Bye.
The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results.